Another black eye for Facebook as a bombshell report claims Mark Zuckerberg, Sheryl Sandberg, and other executives tried to spin bad news. And the stock has paid the price down more than 30% from its all-time highs. Julia Boorstin is live in Los Angeles with the full story, the details of the story, as well as the responses. Julia.
Melissa, Mark Zuckerberg hosting a media conference call today in which he discussed the allegations of mismanagement laid out in the New York Times expose. Zuckerberg going on the defensive, saying they're working to make progress on these issues and that these issues of manipulation and the sharing of fake news on Facebook are never entirely solved.
I've said many times before that we were too slow to spot Russian interference, too slow to it and too slow to get on top of it. And we've certainly stumbled along the way. But to suggest that we weren't interested in knowing the truth, or that we wanted to hide what we knew, or that we tried to prevent investigations is simply untrue.
Zuckerberg on the conference call today also discussing what he called a blueprint for content governance and enforcement, which he published today, saying that the company is taking steps to be more proactive rather than reactive, and they're working on reducing the spread of sensationalist content, among other things.
In general, there are a lot of issues here that we were behind on, and I think a lot of the critique of the company is fair. And a lot of the feedback has been very important for us to take in order to learn and do better, because we feel like we have a responsibility to do that, and that's our primary goal here.
Now, responding to a specific allegation in that New York Times report, Zuckerberg said that both he and Sheryl Sandberg were not aware that Facebook had engaged D.C. consulting firm Definers to work for them. The New York Times laid out how that firm was tied to articles spreading misinformation about Facebook's critics. Melissa, back to you.
All right, Julia, thank you. Julia Boorstin in Los Angeles. So what can fix Facebook? Pete, is this, one, an investable story, or B, a tradable story in your view?
I would say I'd put it more on the investable side, Mel, and the reason I would say that is this. What the problem has been is this has been a disaster since the minute the news really broke. And as Zuckerberg points out, they need to be much more proactive than reactive, and that's been part of the problem. Now, they have finally gotten reactive in terms of they told us several quarters ago how much money they were going to spend. Well, that actually took the stock down even further, right? Because then the concerns became how much will they have to spend to get themselves here? I think what Zuckerberg doesn't really understand, and what most of the market right now is not really understanding, is this is something that's going to take time. And what I mean by that is they're going to have to prove to us that they have cleaned up their act. And it doesn't seem like they have, because it seems as if Facebook finds itself in front of folks every couple of weeks. We're hearing some story about something, and because of that, that just remains and lingers as the problem, and then the stock continues on this downward slide. I mean, this is a $200+ stock that now is trading in the very low 140s, upper 130s here and there. So, I mean, the problem right now is, Mel, when you look at 19 times, though, and you look at some of the verticals that do have growth, and you see what's going on with Instagram versus its competition, there's a lot of bullish things that you can look at there. But Facebook itself has been the problem, and that's the big headache, because of the fact that they're going to keep having to spend more and more and more money.
And they don't even know how to fix it, though. So, Pete, you hit it on the head. They don't even know how to fix the problem. So
you're right.
They can't tell us what the costs are to fix the problem. And every time they think they get a head above water, something else drenches them once again.
It's like whack-a-mole.
It's like whack-a-mole, so they always have a problem. But I will tell you, down 18% year to date, the one that has reaped the benefit of Facebook being in the bullseye for social is Twitter. Twitter's up 38% year to date. Somehow they've avoided this. So I would continue to avoid Facebook, go to a lateral, play Twitter. Different game, different scenario, but seems to be working out better if you're investing money.
You know, there's a line in that New York Times article this morning that basically said to the effect of what's happened at Facebook has basically fractured the political consensus that protected Facebook as well as the other big tech companies out there. Meaning all of a sudden, reining these guys in has become a bipartisan issue. Both sides see a role for government to play in the future of these big tech companies. And what does that tell you, BK? That tells you maybe the best days are behind these guys in terms of making money?
Yeah, I mean, beyond
or the easiest days, I should say.
It reminds me very much of the environment after the financial crisis with the banks, right? They were the bad guy in that particular case, and I don't want to get into arguing about who was or wasn't, but it reminds me of that very much. Secondarily, I view this as we are at peak centralization of the web. We have Web 3.0 coming online, and that's an threat to Facebook's business. The fact that web data is not going to be going through their servers anymore means they have less information to sell to advertisers. And until they solve that problem, I think Facebook's a no touch.